Okay, so welcome to AQZ Thursday with Bishop. We'll be looking at some of the setups we sent. I'll do a brief recap on how to trade this strategy and the brain behind it, while we look at the market basically that way. I'll be going again to the 4-hour time frame, and I'll pick up just any pair, practically any pair. And what I'll be trying to establish here is that price chases yield. In retail concept, to say price chases liquidity. So liquidity is seated somewhere, and price will range more times than it will trend. So if you have a strategy that helps you to catch a range, there's a tendency you have more trades, and then your strategy should be able to be modified when there is a trend so that you can follow the trend. So if you look at the chart right here, practically any pair, you will notice something happening. So you notice on this day, this week, this vertical lines delineate 1 week because we're on the H4 time frame. Notice how price took out the previous week's high and then dropped, came back the second time and then dropped. Notice how price took the previous week's low and then bought, right? Notice how price took the previous week's high and then sold, right? Took it again, sold. Notice how price took the previous week's low here and even went as far as the low of 2 weeks prior and then bought, right? So you could practically see that price could decide to trend. So let's say we have last week's high, and then we have last week's low, and then price traded towards last week's high. Our first bias would be that price will range, trade above the high to some point, do some things, and then melt down. That's what we'll be expecting on an average. However, price will not range forever. Price will trend at some point. And when price trends, what do we expect? So we have last week high and low. Price breaks the high and then begins to make certain move. Already, AQZ has been equipped to help us catch the continuation move. Like we say, for every uptrend, the bear candles are our friend. So you mark up your bear candles, either the inside bar or the bullish engulfers, and then you begin to trade, right? But if price melts down, you know there's a tendency that it's going to be a ranging week, and then you trade it down. So that is the skeletal framework for that strategy. Again, with every strategy, you have losing days and winning days. One thing you don't want to do is nurse fear. Once you have fear, you will not be able to pull the trigger. You only come back at the end of the week on Thursday or Friday and see that your trades have played out, but fear stopped you from taking the trades, right? So if you take a losing trade, like we say, we lose gallantly and then we win triumphantly. So if we go to the charts, I basically dropped a chart of Euro card that was on Monday, July the 19th, happened to be a Monday, right? I dropped that chart, and this was as early as 6:43 a.m. The before London Open on Monday, we had Euro card. Card was so weak, coming over from the weekend, and so many people were saying so many things. So let's go to Euro card. Here we have Euro card. What are we supposed to do? We're supposed to have an indicator. I showed us how to get it. Previous week high, low, right? So I'm going to call up that indicator. By default, I have my prophetic candle, 4-hour prophetic candle on. So this is previous week high, low. It comes, you need to go into the settings and then play with the colors. I prefer to see something maroonish or red to let me know that I'm in a previous week high and I'm looking for sell opportunities, and previous week's low will be blue. Basically, that's just the setup for this. So we came into the week when price traded into this, right? It tapped 1, 2, the third candle was forming when that setup was sent. So 1, 2, this third candle was forming, right? So we're going to look at how we're going to take this trade, right? So by strategy, we're assuming that price will range. It will overextend and then begin to drop. It will overextend and then begin to drop. That doesn't mean it's going to drop forever. And you don't need to catch 200 pips, 1,000 pips. You just need to have 2 or 3 R. And once you've done 2 or 3% on your account for a week, that might just be it if you trade for a prop firm. So let's look at Eurocard. Eurocard was doing this. I gave 2 ways of entry. You either wait for an inside bar that has been violated, or you wait for a bearish engulfing, which are our AQZ qualifying candles. Again, if you don't understand our AQZ qualifying candles, we have our AQZ qualifying candles here. It is either a violated inside bars or a violated bearish engulfers rather, or basically an inside bar with a breakout. So here on H4, we have an inside bar, and coincidentally, it happened to be our H4 prophetic candle. We wouldn't have been able to get an entry of this because it melted away, except you want to trade the ladder. I basically do not trade the ladder per se. So price broke, retested, and dropped. Broke, never gave us a retest, and it's still dropping. But how would we have traded this in real life? So I suggested that if you want to catch an early trade, you go down to 1 hour. So we'll be going down to 1 hour right about now. So when you go down to 1 hour, what you would notice when price pierced through this is that you have a bullish trend, right? So what do you do when you have a bullish trend? Price is basically climbing. You mark up your bearish candles. So I mark up my bearish candle to the top. Again, that's it. Let's put on our sniping tool, right? So this was the bullish, sorry. Yeah, that was our bearish candle. Price broke it, came back, and we bought. Winning trade, right? So let me make this only entry. The next one, we have this bearish candle. You mark it up. Price broke, never came back for a retest. We have this. Price broke, didn't really come back for a retest, and then price continued to push, right? We're still waiting to see an inside bar. We finally got an inside bar here. We'll be anticipating sales from this inside bar. Unfortunately, price did not break to the downside. Price continued to push to the upside. And then we finally got a bearish engulfer, which is one of our candlestick pattern, right? We got a bearish engulfer there. So typically, you have something like this. You have a bullish engulfing for a continuation trade. Remember, you've been marking up bullish candles for buys. So you have a bullish engulfing for a continuation trade, and you have your inside bar. Your inside bar broke to the downside, signifying willingness to sell. It came to your PE and bought, and finally, it invalidated this bullish run, and then you have your reason to sell, and you'll be in this sell right up till now, right? The rules are very simple. There are times you get to points where you are not too sure what price is going to do because you are in between a range. So here we have a bullish engulfing candle, and here we have an inside bar or a bearish engulfer, depending on how you want to call this, right? Is a traditional inside bar, as it were, but this could also be a bearish engulfer if you use only the body. And if you were either selling or buying, whichever the case, you might have lost one or won one. We're not really bothered about that. How are we going to catch our 3, 4, 5% in a week? And then you had that massive sell-off that came. This is Eurocard. I'll give room for questions later on. Let's just take this one by one quickly. So that's Eurocard, and that was how Eurocard played out. Yeah, Somebody's mic is on. All right, so we had EG. EG was a very, very ugly one. It didn't play out too smooth, but we are still selling up to now. If you stay true, one challenge, having several students and even presently going through mentorship with some students, I discovered that one out of the several reasons why traders get disillusioned in the market is their ability to change their mind and the willingness to accept a loss, right? And AQZ gives us very fixed rules on how to do that. So let's look at EG again. We're starting for 4 hours. Here again, we had the high of last week taken out, and it came ferociously. We would have been anticipating sales. Look at the way it played out here. It tapped this high and sold. It tapped this high and sold. It tapped this low and bought. It tapped this low and bought. So we'll be expecting the same thing. You have to have an expectation come to the market. You can't come blindly. So we're expecting the same thing. So let's go down to 1 hour and see how it would play out. Remember, I said it was quite an ugly stuff, but it still played out nonetheless. So here we had this bearish candle. Price came, we'll be looking for buy opportunities. We have bearish candles, we'll be fibbing up for buy opportunities. Notice how price came to the PE. Let me take this lower one out. Notice how price came to the PE and pushed up. I have a friend who got like, is it 3R out of this trade just by this? So that's the push from the PE. You already have 1, 2, 3. Some people are done for the week trading that, right? You don't have to catch all the trades in the market, but let's move on. So we had that bullish, bearish engulfing. Bullish engulfing, you fib the candle, and then price broke to the downside. Automatically, I'll be assuming that we are selling. Automatically, I'll be assuming that we are in a sell trade, right? So what is the highest point I'm looking at for my reference? I have this bearish engulfing candle. So now my attention will turn to the bearish engulfing candle. I'll be anticipating sell from here, which didn't happen. Price continued to push upward. So most likely you have a losing trade there. Now you'll be marking up your bearish candles and you're tracing the market. Finally, you got something that looked like an inside bar. You are anticipating a break to the downside. Unfortunately, price didn't break to the downside. Price broke to the upside. You are not in this trade. Sorry for your loss or for your miss in this case. And then you finally got a bearish engulfing at the top there. So we'll mark up our bearish engulfing, and then we catch this trade. Finally, after being evasive for a while, we finally catch that trade, and oh boy, what a drop. What a massive drop to the downside this gave us. This could have practically ended the week for you on Euro GBP. You need to be willing to take a loss. You need to be willing to stake something in the market to get something. If you are waiting for a holy grail of a strategy that will make you have losses, you are practically in the wrong career path. So that was EG. We had Euro AUD. We had Euro AUD set up. I sent again. So here is Euro AUD, and we'll go back again to 4 hours on Euro AUD. So here we are on Euro AUD. Price came on H4. Again, if you are trading H4, you simply just mark up your bearish candles, or you mark up the inside bar, as the case may be, and you are waiting for a breakout to the downside, whichever one, right? So two AQZ traders can mark up the same pair and mark it up differently. Somebody can mark this inside bar anticipating a breakdown to continue to sell since we are at yesterday high. Somebody can mark up the bullish engulfing, and we'll both be right because you have strict rules guiding you. Finally, price pushed up on the 4-hour time frame, and then we also had somewhere along the line, we had our H4 PC confirming this. We had our breakout, our retest, our sell. Again, I mentioned that if you want to trade this strategy, it's better you look at 1 hour so you can react quicker. So here we are on 1 hour. Again, as at the time price breached yesterday's, last week's high, we had this bearish candle. We'll mark up the bearish candle. Price broke up, came for a retest, and pushed higher. Yeah, what was the last bearish candle? Again, we had this bearish candle. You'll be monitoring it to see if what price will do. Finally, you got something that looked like a bearish engulfing. So what do? You mark up that spot again, right? Price came back to PE, dropped, gave you like 2 hour. Price came back again, dropped. Price pierced through it, went above. Let's say you took a scratch and then it came back again for your PE, and then you have that massive drop. Again, Euro AUD played out well. By next week, I'll be telling us how one of the strategies we teach, one of the modifications we teach in the mentorship program, we call it high probability, low risk trade. If you do that, you'll be able to catch some of these trades at some sweet spots. Just like we have last week high and last week low, we also have yesterday high and yesterday low for us to take some of those trades. I'll give you a quick teaser here. Let's come to Euro AUD, which is what we're looking at. And I'm going to drop down to 15 minutes here. And we're going to look at this day. This particular date was 21st of July. And here on my screen, you have 21st of July. Just we will have last week high and last week low. Look at price, took out yesterday high. And once it took out yesterday high, we'll begin to monitor our AQZ candle patterns. Once it takes out the yesterday high, we'll begin to monitor it, and then we'll draw our fib. And then we draw our fib. So here we have our fib. You can see price broke below, came back for a retest at PE, and that same day gave you 4 hour. This is entry of the 15 minutes time frame, guys. Entry of the 15 minutes time frame. But let's move on. So I'm basically saying that you could actually have refined your entry even further, looking at liquidity sweeps at highs and lows. So that was a massive, powerful 5 hour, 4 hour, 3 hour, depending on where you enter. If you entered off 15 minutes, you could have had even an 8 hour trade. By hour means if you reach 1%, you could have made 8% from this. But remember, you might have lost 1 or 2 trades along the line. We're not bothered about our losses. We take our losses gallantly, and that is why you notice Dr. Papa Pips, I myself, we mention when we take losing trades, we laugh over it in the Telegram group, because losing is part of this business. You need to stake in something to be able to win, right? So let's move on to the next one. Apart from Euro AUD, we also had GA as another one. I mentioned that GA was looking ugly because of the candlestick pattern, but that notwithstanding, you could decide to just leave it out. If something's looking ugly, it's not compulsory for you to take the trade. But here we are in GA. We've been selling since then. GA on 1 hour. Once it breached the top there, it didn't give us an AQZ qualifying candle. But let's start from the beginning. This was why I said it was ugly, because it had this large bearish candle. And if I was going to wait for price to break below the bearish candle, my stop loss was going to be so wide. I'll be having a stop loss of well over 73 pips. So for me, it was an ugly setup, which was why I mentioned that it was looking ugly here. Remember, all of these setups were sent 6:46 a.m. on Monday, before London opened. We would have been monitoring what we want to do since then. So I'm going to leave out this particular bearish candle, because, like I mentioned, it was looking too ugly, right? So the last bearish candle, we can see before the push to the upside happened to be this. Again, this is a bullish engulfing pattern based on our AQZ candlestick pattern. That is a bullish engulfing pattern, the very, very first candlestick, this very first candlestick on the screen right there. So again, price came back to PE and pushed. Price came back, retested our top of the block and pushed, then gave us a new candle, which was this, right? So I'm going to take out this. Right, price came back, pushed a little, played around, but remember, we were looking for sales. So, and if you are looking for sales, I'm going to state it clearly again. When you get to yesterday's high and last week's high, you begin to monitor your bullish scenario and your bearish scenario. And I'll take that again. So we have this candlestick pattern here for a bullish engulfing, right? Then we have this pattern here for a bearish inside bar. You see that? Both of them playing out. You got to choose one, right? So I have a bias for sell. Since last week's high has been taken, I predominantly have a bias for sell. Again, I remember I mentioned that if you are selling based on last week's high, in this scenario, we won't be using we will not be using PE. We will be selling anywhere inside this box. We'll only begin to look for buys when price breaks outside our box. I gave that rule in the very first video. So all of these were basically days of selling. Everything here is a day of selling as price came back. It didn't look too nice, but again, it would have given us some pips. If I go back here to GA on 15 minutes, right? And we're starting from which date now? From 19. So on the 19th, see how it took out yesterday's high, dropped. Again, today we had an example. It took out the previous day's high again and then dropped. So we've basically been selling from this, but again, it was ugly, basically, right? So you could have just let it be. So we had USD Chef again. I'm showing this so that if you're one of those who, stay week in, week out, it looks like the market isn't giving you setup, is because you lack strategy. When you lack strategy, you are lost in the market. You need to have strategy to be able to have a direction in the market, and you don't have to trade every single pair. So here we have price trading into our last week's high, and at the same time on H4 giving us a bearish engulfing candle. So we would have flipped this, and we'll be thinking of buys after price broke above. So it came and bought, then it dropped, and it practically didn't give us any good setup for a sell. Let's go down to 1 hour to see how we would have traded this. So on 1 hour, if you love the 1 hour methodology, we said that once price gets to last week's high, you begin to monitor your bearish candles, right? So, and once you get an inside bar, you also monitor your inside bar, right? So when price came in here, you'll be looking for opportunity to buy. It broke and came back and gave you a retest at PE and then sold. Cool trade, right? So price came back again to the high. Again, we'll be looking for reasons to sell. It broke above and closed above. Now we'll be looking for reasons to buy. We'll be looking for reasons to buy. Back within, then we'll begin to look for reasons to sell. So USD Chef wasn't too clear, a pair too for the week. Unfortunately, that's how the market is. You can't catch good trades all of the time. However, by the time I explain a high probability setup, you will notice that you would have had very good setup of the 15 minutes. On the 19th, when it took out yesterday's high, you had very good reasons to sell, and you would have caught this massive sell. Again, it took out yesterday's high the next day, played around, and then dropped. So you'd have had 2 days of selling, and you basically would have had some powerful trades on USD Chef by the time you narrow down to the lower time frame. I know somebody asked a question about pre-VTB. I'm going to explain that as we wrap up the pairs we have. So I basically was giving us markup on 1 hour, how we could have bought. This was USD card. I think I can just leave USD card. But no, I think I am still selling USD card. I hope I'm still selling USD card up to now, so I could quickly show you that. All right, so this USD card, it seems to be buying up briefly now. All right, so USD card took out that high. You begin to mark up your bearish candles, and finally it gave you this inside bar. Once it gives the inside bar, you mark up, right? Again, you are selling. Notice your sells at PE, sells at PE, then it melted away. Again, this would have given us 3 hour, 4 hour, depending on how we want to do it, right? So you entered from PE, this would have been TP1, TP2, TP3, TP4, TP5, TP6, TP7, TP8. If you enter from the edge of the box, then this would be TP1, TP2, TP3, very close to TP4, before rejecting of that place. Again, very, very sweet one. I'll look at just one more and leave out the remaining. Let's look at GC. GC was a very, very nice trade, even though the stop loss was so wide. GC, this is GC on 1 hour. We had that inside bar. The stop loss was wide, about 43 pips. No, more than that. Stop loss was wide here. Yeah, that's about 80-something pips on GC. It was a wide one, but boy, oh boy, it dropped. It did drop. And if you go down to 50 minutes, GC, you have very wonderful entry. So when it took out yesterday's high, you begin to monitor for candlestick patterns, right? On the 19th, yep, you begin to monitor for the candlestick pattern, and here you have it. You have that inside bar there. So that will basically reduce your stop loss, right? And then you had a break, a retest, and then you sold off, and it sold off practically throughout the remainder of the week. That gave you, if you're entering from your TP1, TP2, TP3, and it kept selling off again. So I'll stop there for this. Let's go to how you could take entries of BTB, even if you want to use this method or you want to trade the H4 PC, right? So which pair will give us a very good example of that? Let's quickly scan through and see. I stopped sending signals after them when I noticed so many people weren't following. Okay, so AC took out last week's low. It took out last week's low. I didn't see this one on time. AJ. Let's look for an example of BTB, something that can give us a good example of BTB. All right, so I think we have one example. So let's go down to M15. So you're looking for BTB and pre-BTB as an entry. Somebody asked for that to be covered, and we're looking at that. So let's say you wanted to take a buy from this low, right? So you notice that is the bullish candle prior to this lowest point. Then this was the bullish candle prior to this lowest point. What is the BTB? We would be feeding from this low to this bullish candle. We'll be anticipating price breaking out to give us our break the bank, then possibly come back to PE like it did here, and then rally off from there, right? Again, you don't have to enter from PE. You could as well have entered from the edge of the box. In this case, we had a PE retest and then a push to the upside. So how do we trade break the bank pre-BTB? Now, this box signifies the range from your break the bank candle to the lowest point, and you are anticipating buys. Once price breaks your PE to the upside, you assume that the buy has started. That's pre-BTB. You assume that the buy has started. You don't wait for a breakout yet in this case. So when we had these two bullish candles pushing up and breaking above the preferred entry, we will now be entering upon a retest of the preferred entry to go long, right? So in this case, we'll be having something that looks like this with our stop loss beneath, and then we can now begin to go long, right? Even before the bank candle has been broken, right? That is pre-BTB. Pre-BTB comes with its own risks and disadvantages, and that's because you could get faked out. Of course, if you catch the trade, it could be sweet, but what the example I showed you guys here now is an example that worked. Let's look at some other examples that didn't work. So here we had the, let's say you didn't have everything here. You don't have everything in this box, right? We don't have everything in that box, and we're anticipating to buy. For instance, we have this bullish candle responsible for this low. We would have fibbed to the upside from this point to this. Notice how you had a break, a retest. So a break above PE becomes your pre-BTB. Notice how you had that break and you have a retest, and it just went straight for your stop loss. It went straight for your stop loss. You would have lost that trade based on that entry, right? So finally, you got one that eventually worked out. Again, just like with everything with trading, sometimes you have some work out and some wouldn't just work out. But that's the concept of pre-BTB. I hope the person who asked is clear. Is he online? Somebody asked about that. Is the person online? Wow, not sure the person is online. But somebody asked about pre-BTB. Yeah. Perry, you want to say something? I can see your hands raised up. Let me see if I have comments. So this week has been interesting, very, very sweet. From the setups that we dropped, we're basically monitoring buys and sells, and we're willing to change our buyers at any point in time to take our trades. You notice we want to focus on pairs that give us setups in London. So we have a lot of Euro, GBP pairs on our list. All right, thank you. Yeah, pre-BTB understood. I think that has been covered. All right, so what I expect you guys to do, remember we do this in conjunction with H4PC. So when you have your H4PC, agreeing with your bias suite. And what this does is if you are one of those people that don't like sticking to just one pair, then it basically filters the pair for you. So on this particular week, for instance, you wouldn't have had any trade set up because it didn't take out the high, neither did it take out the low on Euro JPY. But notice this week, it took out the low on Euro JPY, and boom, you had that massive buy to the upside. The next week, it didn't do anything, so there'll be no setup. This week, it took out the low, and when it took out the low, you'll be anticipating buy opportunities. But what do? You keep marking up your bullish candles. Sorry. You keep marking up your bullish candles until you find one that suits what you want to do. So you have this is a breakout. This might have been an opportunity you'll be assuming to take a buy, and this failed. In fact, we even have a H4PC there, and that failed. So if you are using your H4PC, price broke out, came back, didn't pick, you broke beneath. Now you are bearish, retest, and then you would have sold off. This is a situation of where you have continuation trades. So you want to be able to put that together. So what I would expect to get from people who want to trade this strategy, I will expect that you write down what we call a trade plan. Write a trade plan and send to me either in the group or you can send privately to me. If you're sending privately to me, please be patient. I might not be able to read all the messages instantly. I want you to write out a trade plan. What should your trade plan consist of? If you don't have a trade plan, you're basically trading blind in the market. You should have a trade plan. Your trade plan should be like, when price reaches my, excuse me, reaches last week's high, I begin to anticipate some form of reversals. That might be your trade plan. However, I don't know how soon price will make a reversal. So what do? I continue to monitor my buys. right? I continue to monitor my buys on H1 and trade my buys on H1 until finally my buys will fail. But if I get an inside bar or bearish engulfer on the H1, I will flip my bearish engulfer while still keeping my bullish trend, and then I have a range. Price will pick a direction, and then I'll trade the direction for the remainder of the week. Most likely, when price picks a direction, finally, it's going to trade for like 2-3 days, and there you have your trade for the week, right? So we saw that playing out in USD CAD. So you type out your trade plan, and let me see. For those of us that will be interested, so again, I make mention of USD CAD. Here it is in USD CAD. So if you're trading your trade plan, price has taken out the previous week's high. So I'm anticipating sales. But I won't just sell blindly. I begin to mark up my bearish candles to see how price reacts, and I could even trade off them. If you traded off this bearish candle here, you would have caught this massive push to the upside. You would have caught that massive push. Obviously, you won't catch everything. You would have had maybe 2, 3 hours, 4 hours, and then you get out. And finally, you got an inside bar. So what do you do with your inside bar? You fib out your inside bar, and then you wait to see what price happens. Price broke below your inside bar is an indication of willingness to sell. Then you begin to sell from your PE or from the box, whichever one you prefer, and finally have that drop, and then it continued to drop to the downside. Of course, the strategy remains the same. You continue to fib your bullish candles in the case of a sell. So I'm fibbing this bullish candle. Note that I'm fibbing that bullish candle. Let's have our snag it. So price broke below, retested, dropped. Again, I'm fibbing the bullish candle. Price broke below, retested, dropped. Again, I'm fibbing the last bullish candle. Price never really got there. Again, I'm filling the last bullish candle. Now I have an inside bar. With price closed above, price hasn't closed above. We are basically still bearish here, right? And that's that about this. So I don't know if anyone has a question. If there are no questions, we quickly scan the market and see if we have something for today. If not, we call it a wrap. All right, so let's quickly, using this strategy and the H4PC, see if we have something playing up right about now. We'll quickly scan through all of the pairs. So we have AUD CAD, nothing, AUD Chef, AUD Chef gave us this inside. We had our H4PC here. So we would have fibbed our H4PC, broke above, came back for a retest, boom. That is a 2-hour or 3-hour trade. If you enter from the PE, this will be TP1, TP2, and that's TP3. So AJ, again, we had a H4PC, bullish PC on AJ. That PC happened after this candle closed. We have a retest of our PE. This gave us TP1, TP2, TP3, TP4, TP5 on AJ, ladies and gentlemen. Again, remember, it took out the low, and we're anticipating buys. And I'm using only H4 PC for this, not going down to H1. Let's quickly check. Wow, we had a wonderful trade on AUD NZD, and this pretty much happened yesterday, right? So first of all, we had a H4 PC telling us to sell, broke, retested the H4 AQZ block, and then melted away. Wonderful trade on AUD NZD. Based off this strategy, let's go down to 1 hour and see. So based off this strategy, we basically would have been boxing up our bullish candles. Sorry. Yep, so we have our bullish candle, price came, dropped lower. Once we created a new low, we mark up the next bullish candle. Price came, what did it do? Drop lower. Oh, we go to the next bullish candle. Price broke above it, right? And now we are buyers, boom. And then we are going on our way up, right? So also could have caught AUD NZD trading it this way. Here we have AUD, USD. Let's go back to H4 so we have a cleaner, broader view. All right, AUD, NZD, same thing, tapped yesterday's, last week's low. And when it tapped last week's low, what do? We begin to feel our bullish candles again. Here we are, it never really came back. We had this one again. It broke beneath, came back for a retest, dropped, gave us TP1 or TP2, broke above, and now we are buying. Let's go back to 1 hour and see how we would have traded this. Once it broke below, we begin to monitor our H1, right? So we would have seen this didn't break above. Okay, we would have seen an entry here. This would have played out for like an inside bar. Price broke above, came back to pick us, and believe it or not, that gave us like TP4 on that particular trade, right? It came to your PE to this AQZ block here is TP1, TP2, TP3, TP4, TP5, TP6, TP7 on this particular trade, doing that. And then after then it melted and came down and you begin to sell again, right? Until it gave you another one. So again, you could have had some winning trades using this. Word of caution, anyway, you can't monitor everything. You need to just narrow down on a few pairs and then monitor them. Sometimes you'll be unlucky. The pairs you choose to monitor wouldn't give you setups, but then what do? So here again, we have one price tapped on yesterday's last week's low and gave us sweet entry there, right? So we would have bought and then price came back and closed below. Remember I said, once it has tapped yesterday's low, last week's low, you are basically bullish. You only begin to think of selling when price closes below the block. Price closed below the block, you have your sell there, and then it dropped massively, would have given you 2 or 3 hours off your trade, and eventually you got your H4PC somewhere around there again for a continuation trade for the buy. You never got a retest here, but if you go down to 1 hour, you definitely would have gotten an entry on card CHF. I remember I traded card CHF. I was so, I didn't follow my rules at one point in time, and I got out too early. I got out too early when it had slight consolidation yesterday afternoon, card CHF. It had a slight pullback after tapping out yesterday's high, and I ran out, and by the time I came back, whoosh, the pair had gone very, very far. Where is card CHF here now? Yep, so that's card CHF. I was in this trade, right? Bought massively, then again, tapped out, Asian low, I enter. When it got to yesterday, look at this dotted line. That dotted line happened to be yesterday high. When it got there and it started pulling back, I got out and then boom, price went to the upside. Again, happens. Right, so here we are. This is it. This was like a bullish engulfing candle. Right, price came back straight to PE and then boom, on 1 hour, right? Again, massive trade. If we just pick 2 or 3 pairs and stay with them, only 2 or 3 pairs and stay with them, we will do wonders. Card CHF on 4 hours. Let's check. Again, it tapped yesterday's low and played up. Card JPY played and then dropped and then finally gave us our H4PC. We would have had H1 there and then push, right? So we're looking for something that will be giving us a setup right about now. Still haven't found any. This came, played up, right? If you are trading, then it gave us our H4PC here. So if you're doing that, H4PC supporting your buyers that the market will buy, broke above, came back, and then pushed. Powerful trade. Did Ethereum play out? Yeah, Ethereum also played out. That's Ethereum for you. Again, that's it. Broke to the upside and pushed. If you go down to 1 hour, you'd have had a sweet entry on Ethereum. Remember, you were selling off the bullish candles, selling off the bullish candles. Then you had your inside bar. And what did I say? When you have your inside bar, you want to keep your bullish candle bias intact in case price reacts from there. But you're also looking for an inside bar. And here you have an inside bar. Price broke above, telling you that we are willing to buy, came back to PE, and then push. It got to the previous one, dropped back again to your box, and then just went away. This was a massive, massive run on Ethereum, well over how many thousand pips, right? Over 24,000 pips on Ethereum. Again, very simple. Same thing played out on Bitcoin. Same thing played out on Bitcoin. Same thing played out on Bitcoin, ladies and gentlemen. Here we have Bitcoin. We have the similitude of our H4PC showing up here. Again, that was the bullish engulfer. Price broke to the upside, came back to your PE, and then Bitcoin basically gave us, Bitcoin basically, unfortunately, I didn't catch Bitcoin. I got Ethereum, sorry, but I didn't catch Bitcoin, unfortunately. Hey, what's happening? Yep, so here we have possible three, wow. Look at the number of pips on Bitcoin. Again, using the same strategy, guys, same principle. Same principle. Let's go back to 4 hours and quickly check. Might we get something to trade for this afternoon? I know there was a news. Has that news played out? Hey, Papa Pips is on here with us. Morning, sir. So here we have news coming up. Let's
Morning, Bishop.
Yes, sir. How was your flight?
It was good. I'm on vacation with my son out here visiting with him and stuff. So I didn't teach this week, but I'm following you right now. Hey, don't get on your shows too often because I'm not up this early.
Yeah, I understand. You're welcome.
Looking good what you're sharing. It's just same thing I would do.
Yeah, same thing. The point is that the strategy is simplified. You're simply looking for candlestick patterns, and the candlestick patterns have been, clearly spelled out. It's either a bullish or an inside bar or an engulfer. And of course, the engulfers could be violated, and the inside bar waiting for breakout. It's just as simple as that. The challenge most times is people find it difficult to switch minds, to switch their bias very fast. You hold on to a losing trade and hope that the God of Forex will answer your prayers. Well, he does answer, but not as often as would make your account to grow. So let's quickly check again and see if we have anything before we wrap up. Today, Bitcoin played out well. Quickly. Have I done the GBP pairs? GA, we've done GA, we've done G-card. We missed GCHF. Again, we need more people dropping these setups. We noticed that in terms of setups, apart from Papa Pips and myself, once in a while, people don't drop setups, right? Let's drop these setups. We had this inside bar here at first on 4 hours. You're monitoring the inside bar price, dipped lower, telling us we want to sell. Again, for sales, you mark up your bullish candles, right? So price came back, and so, but around that time, you got you got your H4PC. You're no longer interested. The H4PC takes precedence. You have your breakout, you retest to PE, and GBP Chef, from that particular point, GBP Chef had given us from PE. Again, we call this A1, we call it TP1, but it actually depends on where your entry is from. If your entry is from the tip of the AQZ block, then this will no longer be TP1. Your TP1 will actually be the S and R line, the black line there. If you get my point, if you are entering from here, then your TP1 will actually be this point, right? So that will be around 1:1. But if you entered from your PE, then by the time you are getting to this point is around 1. You're already doing 1%. And by the time you get to the middle point, you're over 1% already. By the time you get to this point, you're like 3% up already, right? So if you are entering from the PE, your stop loss is smaller and you could do well. So this came straight up to PE, TP1, TP2, TP1, TP2, TP3, TP4, TP5, TP6, ladies and gentlemen, on GBP Chef. TP6 on GBP Chef. So now you understand why it looks like sometimes we get upset when people don't drop markups. Let's go down to the lower time frame and see how we would have traded GBP Chef based on break the bank. So now we're on 15 minutes and we've seen how we would have traded GBP Chef. Let's collapse this even more. So we had our breakout here, ladies and gentlemen. That was the breakout. Price continued to come downwards. Again, if you want to play with 15 minutes, if you really want to play with 15 minutes, price broke out to the upside. That was your upside. You fib this bearish engulfer. Fib it. Right? Price came back to it and dropped straight to your PE. Now notice this bullish candle, or rather this bullish candle here, is the last bullish candle response for this low. Sometimes I find it difficult using this because some broker, it might not just be a bullish candle. So let's just use this bullish candle. So from this point to this point here, that is my breakout. That is my retest to PE. And then the trade went. So on this particular trade, the first setup, you'd have had like 1.5 hour or 2 hour. Then you have a retest again, and then price pushed up to the upside. So if you take my advice, I will beg of you to write a trade plan. You can't trade this thing. There is the golden ladder. There is the entry of the H4. There is the entry of the H1. There is the entry of the M15. There is the entry of the H4 PC. You can't trade all of them. You get confused. You need to pick one or two, then write a detailed trade plan, right? And your trade plan should have things like what you will do when you see this. It should be very, very specific. It shouldn't give room for emotions. It should be specific. If I find if I'm bullish, I'll be marking up my bearish candles. If I find an inside bar or a bearish engulfing on the time frame, on so time frame, then I'll mark that up, and then I can be trading within the range. It happened with gold. Same thing happened with gold some weeks back. If you go to H4 on gold, and we're practically trading gold up and down during that period. Yeah, was that? Yeah, this week of consolidation, this week where we had consolidation, gold was bullish. This was the last bearish candle response for that high. Then we had the bearish engulfer. So simple. Now I was expecting sales because previous week's high had been taken. But I still had my bullish scenario set up. So look at what happened. Price went, dropped back to my bullish, but came back to this point. Remember, I said I will always sell. If I'm looking for a sell after the high has been taken, I will only sell after price has closed and buy after price has closed above the PE. So I'm a seller here. It came back straight again to my point and then bought and then sold, and finally we had a break above. Right? So there are times the market wouldn't be decisive. You wouldn't have made a decision. You can't force the market. You can't force your buyers on the market. You simply trade what price is telling you. So you're in a range, trade the range. Trade the range. So you need to write your trade plan, put up your trade plan. I'll take out time next Thursday to take 2 or 3 out of the trade plan. I'll criticize it and amend it, and then I'll move on. But I need at least 5 people to submit their trade plan for us to be able to do that for next week. Let's quickly see if we have anything ready. This week gave us some very powerful trades already. See this one again. Price traded into last week's low, and this is a buy. Powerful buy. Confirmed by H4PC. H4PC gave us the buy, broke above, came to PE, and then moved. Again, this is a 5-hour trade. This is about a 5-hour trade. Again, if you take your PE, this TP1, TP2, TP3, okay, TP4, 4-hour, ladies and gentlemen, right, on UJ, right? So I don't think we have anything. NJ also gave us another one. Here was our H4PC on NJ, right? This is the breakout. The question some people ask me is that how do I know if I should trade off the PE or from the block? And we explained this before. You could have 3 entries, right? You could have your 3 entries. Entry 1 at the tip of the box. Sorry, take this out. At the tip of the box. Entry 2, entry 3. If this is what you want to use, put it in your trade plan and submit, right? I don't do this. I go down to the lower time frame to take my trade. So I have better entry. So you could do the 1 hour. You could do the 1 hour to enter your trade. You are looking for an inside bar that has formed, and you are waiting for price to break above that inside bar. So here you have an inside bar at that low. If price breaks below it, you're no longer interested. You'll be looking for sales. Price break above it, you are buying. That's one way. You could also go down to 15 minutes and use BTB. Right? So let's do H4 first. Mark up. We'll be rounding up in another 5 minutes or thereabout. I'm not sure. So I don't trade the ladder. I find it difficult entering my trade just anywhere. I have to mark up my blocks and then the AQZ blocks, and I take my trades from the blocks. That's the way my brain is wired. Right? So we have, and you can't trade like somebody else. You need to find what suits you. So this is our block. I'm going to drop down to M15. So here we have the breakout. We basically had the breakout here. All of this move happens to be the breakout. Notice how price kept respecting the last bearish candle, and then price started its descent for a retest. So when price started its descent for a retest, we call that a discount. Price kept dropping. Again, price keeps respecting the bullish candles. Then you have this bullish candle response for that low. You now want to flip to the upside. That is your breakout. Now we didn't have a retest of PE, and then price moved. This is the pre-BTB. Price broke above the PE, retested the PE, and then started buying. That is pre-BTB. Right? For those of you who love using that. So basically, that was how the week went. Sorry for your loss if you didn't stay true to the strategy, if you were hopping around, and if you were moved by people saying that I smashed 5 TP, I smashed 3 TP, and you've been monitoring GA, and all of a sudden you leave GA for gold or for GU, and you lost track, and now you're back and price have done 5 hours without you. You need to just pick one and stay with it. This is XPX 500 doing exactly what we wanted it to do. XPX 500 did exactly what we wanted it to do. Go down to 1 hour, we would have gotten our entry on XPX 500. It took out last week's low, and then we became bullish tentatively. We would have continued to sell, like I mentioned. We'll be looking for sales quite all right, based on the strategy, right? That was a bullish candle response for that low. Price traded back, and we sold. Again, we have that. Again, we have this. And finally, we had this inside bar, right, at the base. Price broke above and then went. Unfortunately, we might not have gotten an entry using this, but that's how it is. Hopefully, you got something out of today's webinar, and I'll try to see if I can post it on YouTube. You go join, guys. When you go to YouTube, like our videos. Don't just watch them, like them. Let it help the algorithm. We want to bring the AQZ group to 5,000 before the end of next month. And there's a bonanza, well, I call it a bonanza, a freebie coming up. We are presently at 1,349. We want to get this to 5,000. When we get to 2,000, there will be, we'll have, what will I call it? We'll have a freebie, right? We'll be giving an indicator free. I know we already have market structure. We have AQZ MS for free already, but you guys will want to see what H1PC can do. You really, really want to see what H1PC can do to your trading. It's phenomenal. It helps you, just like we're marking up H1, we're marking up inside bars on H1. Now you have the EA do it for you. You have the EA practically do it for you. So we got a bullish engulfer here, and that would have, remember I said we wouldn't have caught XPX 500, right? But see what H1PC would have done for us, right? So break, came back, would have sold, pushed back, and then we have a retest of our H1PC, and then boom, price went the other way. So there are many things the H1PC can do and some other free indicators. We want to get this group to 2,000, and I expect us all to put in the work. Ladies and gentlemen, thank you for coming online, and I hope you enjoyed yourself. Let's continue our discussion on Telegram. Have a wonderful evening, night, or morning, wherever you're joining us from. Bye-bye.